You are listening to chartingwealth.com for Tuesday, the 9th of October, 2018. We see the S&P 500 about flat for the day. The NASDAQ 100 down, 20-year bonds down, gold down. Now, let's first jump into the S&P 500, starting the week off with a pretty sizable red candle forming. Again, just the first day of the latest 5-day candle, and looks like we might have a crossover at the end of the week. Again, it's just the first day, but we see the derivative oscillator negative and the price percent oscillator trying to cross over, going down. Again, all that while the S&P is about flat as far as real price movement goes. We're looking at our Heiken Ashi candlesticks. We'll attach a special training for you at the end of today's show, if you'll look for it on the Heiken Ashi candlesticks to make sure you understand how that works. We look at the 2-day chart, first day of the latest 2-day candle. Big red down derivative oscillator, price percent oscillator also heading down, and we've got again a red down Heiken Ashi candlestick. We go to the 4-hour chart. What do we see? Down in the morning and then up some in the afternoon, trying to equalize that movement for the day. And again, prior to that up movement in the afternoon, we'd had 5 strong down candles. We'll continue to keep our eye on the S&P 500 and see if we have a weekly vertical crossover at the end of this week. Hoping that it was going to do that this last week, but it just never managed to do it. Now, what is the Qs, the NASDAQ 100 doing? Well, remember, we had a weekly vertical crossover going down all the way back on the week ending the 21st, and then really sort of a sideways slide. Now things are trying to move over markedly. We see the derivative oscillator heating up in its downward momentum and the price percent oscillator heading down on that weekly chart. First day of the latest 2-day candle, a big down candle forming. Again, won't call it until it finishes form. It looks like it'll be pretty big. And of course, that price percent oscillator really ticking over, heading down. And we look at the 4-hour chart. What do we see there? Well, of course, we see 6 strong down candles down in the morning and in the afternoon on Monday. However, derivative oscillator losing some downward momentum. That price percent oscillator still heading down quite strongly. So again, we'll continue to watch and see how things develop on the Qs. But once we had that trigger occur and that jumping in point, then of course things have really heated up quite nicely for us. And it's moving in the direction, what? Of that weekly vertical crossover going down. Once we had the trigger event after the pullback on the 4-hour chart, things really launched down quite strongly. And again, for the day, down 0.61% on QQQ, the NASDAQ 100. So we go from the Qs and from stocks to bonds, bonds down 0.34%. Now remember, we had that weekly vertical crossover going down back on the 14th, the week ending the 14th of September, going into the 4th week of strong down movement. And we see the derivative oscillator gaining downward momentum, price percent oscillator still heading down quite strongly. For Monday, first day of the latest 5-day candle, the first day of the latest 2-day candle, pushing through that 2-day trend line. And we see that the derivative oscillator gaining downward momentum, price percent oscillator continuing to head down. And we go from the 2-day to the 4-hour, down in the morning, down a little more in the afternoon. Derivative oscillators lost a little bit of momentum, but that price percent oscillator is still heading down. So let's continue to follow and watch that. I would caution you that are things bottoming out? It's hit the same bottom somewhere around the 112.66 price. So keep your eye on things. If things bounce off that bottom and head up, and crossover going up, penetrate the 2-day trend line and such, there may be some signals for us to pull that trade. So just keep your eyes apprised. Keep watching if you are in that down trade, because it has been good to us. So we'll continue to watch after it set itself back up a second time for us to jump in. And again, hope that your practice trades are going well and that you are working on these things. It's important not only to listen to us every day, but also to do the practice trades. Remember, we're not a stock calling service. We're an education firm. We want you to train with us and practice this stuff and get good at doing it. So what's going on gold? Well, gold crossed over, going up, of course, at the end of this prior week. Those of you who signed up for our texting service know that. Those of you who listen to our weekly review and forecast know that too, because we announce it there. And what do we see happening at the beginning of the week? Is it going up? Well, no, not strongly. In fact, we're starting off with a down candle. Derivative oscillators gaining upward momentum. Price percent oscillator still crossed over going up. But as far as the first day of this latest weekly candle, down a little bit, gold down 1.11%. So we go from the weekly to the 2-day. What do we see there? Well, a big drop in that 2-day candle after the two prior 2-day candles were up. First day of this latest 2-day candle is down. Derivative oscillators flat. Price percent oscillator is flat. What do we see going on the 4-hour chart? Well, down strong in the morning, which of course would portend something for us not to be getting into. We have a reversal underway, a pullback going in the opposite direction of the 2-day and the weekly candles. So we will wait for that to end. Big strong down movement in the morning, up a little bit in the afternoon. Those of you who are looking for a jumping in point on that 30-minute chart, of course, you saw it first thing, strong down movement in the morning, and all things did was they just continued to sort of peter down after that. And again, with the derivative oscillator gaining momentum, price percent oscillator finally toward the end of the day, things started moving up a little bit, but of course too late to try to use that 30-minute chart for jumping in around 10:30. So we'll continue to keep an eye on the 4-hour chart. And when it finishes its pullback, if indeed it does and goes back over moving up, we'll look to jump in. Folks, that's where we are as we end the first day of the week, go into Tuesday, the 9th of October. Thank you so much for being with us. You have questions, problems, concerns, write us cw@chartingwealth.com. We love to hear from you, and we'll continue to bring all this information to you as we wrap up our European trip over the next few days. We've been able to get all these broadcasts out to you. We'll continue to work hard to do so. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.